Hello and welcome to Swak Academy. In this video, I will make an in-depth stock fundamental analysis of the company BJ's Wholesale Club. I will cover its history, business model, revenue and growth, profitability, balance sheet, management, valuation, and finally do the 3M analysis. So make sure to watch till the end of the video. BJ's Wholesale Club was founded in 1984, 40 years ago. Its headquarters is in Marlboro, USA. The company has a $10.2 billion market cap. Its stock is trading around $75 at the time I'm making this video. BJ's is a membership-only warehouse club operating in the eastern United States in addition to Ohio, Michigan, Indiana, and Tennessee. BJ's offers a variety of special benefits to its members. They include member pricing, a variety of name brand products at discount wholesale prices, acceptance of all valid manufacturers' coupons, and acceptance of many forms of payment. Memberships at BJ's are required for these benefits and are available to individual consumers and businesses. BJ's membership normally lasts for 12 months from the date of purchase and must be renewed yearly. BJ's major competitors are Costco Wholesale and Sam's Club. BJ's grew its revenue from $12.4 billion in 2016 to $19.3 billion in 2023, a 55% growth in 7 years, a compound annual rate of 6.5%. In this chart, you can see the increase of the number of stores. BJ had 214 stores in 2016. In 2023, the number increased to 243 stores. So the company is growing and buying new stores and club every year. This way, the revenue of the company will increase and they will be able to purchase cheaper products due to the higher volume. If we have a look again at the map, you can see that they are focused on the East Coast and still have huge expansion potential in other parts of the USA. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create these revenues. The gross profit margin is the result of gross profit divided by the revenue. The gross profit margin shows the amount of profit made before deducting selling, general and administrative cost, which is the firm's net profit margin. The gray line in the chart represents the gross profit margin over the years. The gross profit margin increased to reach its peak 19% in 2021, then decreased to 17.8%. I prefer to see the gross profit margin increasing with revenue, however, this is only a slight decrease. I will discuss the operating expenses of the company later in my video. Next, let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operations. It is the amount of money that a company has left over after meeting its operating cost, but before paying its taxes. It is good to see that the operating profit is increasing with revenue. In 2023, the company made $763 million in operating profit. The operating margin is relatively thin with 3.9%, however, this is typical for retail business. Now let's check the free cash flow. The free cash flow reached its peak in 2021, then decreased to $418 million in 2023. This decrease is due to the investments done by the company to property, plant, and equipment. BJ's is investing and expanding, and this costs a lot of cash. This chart shows the capex invested in new clubs as well as the number of clubs opened every year. Now let's check the efficiency of the company, in other words, analyze the operating costs. As you can see, the operating costs have been increasing since 2016. It is nothing crazy, only a slight increase. What is good is the percentage of the operating cost from the revenue, which is the blue line in the chart, is decreasing to 13.8%. This means the company have a good operating leverage. The revenue increase does not lead to the same increase in the operating expenses. Now let's have a quick look at BJ's balance sheet. BJ has $36 million in cash. BJ's total current liabilities are $2.56 million. The total current liabilities are the liabilities which the company must pay within 1 year. BJ long-term debt is $398 million, which is very manageable. However, the long-term operating lease is $2 billion. Let's have a quick look at the debt development. As you can see in this table, BJ's debt have been constantly decreasing since 2017. They have paid the majority of their debt. This is a chart showing again their debt developed over the years. As you can see, the debt is going down every year. Considering their operating profit is $700 million as shown before in this video, they should have no issue paying back their debt in the future. Now let's jump to valuations. BJ has a 0.52 price to sales ratio, a 19.68 PE ratio, a 12.94 price to free cash flow ratio, and a 6.98 price to book ratio. Pause the video and check how the current ratios compare to previous years. Now let's do a discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering a 7% growth the first 5 years, a 5% the 5 years afterward, a terminal multiple of 15 and 15% discount rate. The intrinsic value of the stock is $39.25. BJ's is trading at $75, so the stock is a little bit overvalued. The market is paying a premium for the quality of the business. Finally, let's do the 3M analysis. 1M for moat, 1M for management, and 1M for margin of safety. BJ's have a strong moat. Its business model allows only members to buy from its store. As you can see in this chart, the membership renewal rate is around 90%, so it is a sticky business. Management have done a good job cleaning the balance sheet, growing the company, and investing in shares buybacks to increase shareholder value. You can see in this chart that the company invested $625 million since fiscal year 2018 in shares buyback. The company is overvalued and trading above intrinsic value. The balance sheet is almost clean. Finally, let's check what analyst estimates are. 10 analysts recommend to buy, 12 to hold. In conclusion, BJ's is a great quality company with a great future. I definitely recommend buying the stock, however, below its intrinsic value. At the moment, it is expensive based on my analysis. I will keep it on my watch list and keep an eye on it in the future. Let me know in the comment section below what you think of the stock and if you are thinking of buying it. If you have found value in this video, please give us a like. This helps a lot, and consider subscribing. Thank you very much for watching the video.